Hello, everybody. Welcome to the Prospero.ai stock market live streams. The market is making some wild moves as we open up here today. So we have a lot of great topics to cover, reacting to the Jerome Powell Jackson Hole reaction from the market. The markets are mostly red today. The QQQ has just popped into the green by 0.02% as we're starting the stream here. Everybody, like the streams if you're a regular viewer. If you're a new viewer, welcome to the Prospero community. We love seeing all of you guys tune into these streams, and we hope you enjoy them and that they're helpful for your investing. So without further ado, I will take you all through the topics that we have at hand today. As always, if you have any questions about individual stocks, macro, business, AI, whatever, Prospero itself, we will be happy to answer. Just leave them in the chat and we will address all of them. But without further ado, we will be getting into the Jackson Hole reaction from the market, a very bullish one. And as all of you Prospero users know, heading into it, our signals were pretty cautious for net option sentiment for the SPY and QQQ. Both were in single digits last week. Now the QQQ is up to 26 today, and SPY still down at 7. But with a bullish reaction, is George feeling better about a lot of the growth areas of the market, which we were kind of turning away from towards the end of last week, going to stocks? Some that were mentioned were Lululemon, UNH, Charter. Is growth back on the table now, just after Jackson Hole? Then the big event of this week that will be happening on Wednesday is NVIDIA earnings, and NVIDIA has been able to deliver against a very high bar since it's been the leader of this AI market rally. And today, NVIDIA is back in the green. It's nearing all-time highs. So can NVIDIA do it again and have a great earnings? They're expected to grow a lot still. So I'll give you those numbers when we get to the story. But a big market moving event on Wednesday. Then the meme stock of 2025, Open Door, is up again today. Let's take a live look where this stock is. But from pennies to now well over $5 per share in a very short amount of time. Yes, up 12% today and about $5.64 per share, and up over 700% in the last 3 months. So we have to talk about, is this sustainable? It's had over 300 million shares traded already today. So much volume, so much excitement, a lot of hype around this name. How long can it last? And what I also want to ask George is, will this start rubbing off on GameStop, a little bit of a halo effect where people will be reignited with this meme trade? Because GameStop is still red today and hasn't done great recently. So I'm wondering if people will turn some of their excitement back towards the original meme stock. Then we'll get into some of those growth sectors that we were turning away from. So quantum, flying cars / drones, nuclear, and space stocks. Which of these is the most exciting for George to buy the dip in, and he has the most faith and confidence in long term? Which of these sectors, the momentum behind it will come back the quickest and last the longest, and really just be the best long term investment over the next decade? Then I wanted to highlight Tesla today because Tesla was up to 100 upside breakout in the Prospero app. Let's take a live look. Still at 100 upside and an 87 net option sentiment. And I remember that Tesla, even just earlier in August, it was down in the 60s in net option sentiment. So now with that climbing and the upside being pinned at 100, is Tesla looking more interesting for an end of year rally, now that it also has its full self-driving and looking to expand and possibly grow the amount of rides it's making? We'll just give an update on Tesla stock. Then a lot of backlash coming for Cracker Barrel from changing their logo. The stock lost 100 million in market cap in a single day. And I don't really want to talk about Cracker Barrel specifically in this story, but just why George thinks that all companies are kind of going to like bland, minimalistic logos nowadays. Like, does that help, or are they just following a trend? And we'll see this trend, just ebb and flow and reverse in the future, where companies will make more exciting logos. And another food space headline today. Keurig Dr. Pepper is making an $18 billion deal. So they are making a big splash. They're acquiring a coffee company. They were down when this got announced. Let's see if the market has changed its attitude since. No, they're still down 8%. So the market is not loving it. We haven't really covered like a lot of food companies recently, so I figured to bring this one up and just ask George if it's an interesting space. Kind of looking for more value stuff recently on the streams. I wonder if this space like fits that bill, and if any of stocks in this sector that are down would be interesting for him over the coming months if the value trend continues like we were thinking. And then last but not least on the stream today, we will highlight how Ethereum could actually be the new leader in the crypto space. So over the past month, the difference in performance between Bitcoin and Ethereum has been pretty dramatic. And it did lag Bitcoin basically the whole way up so far. But okay, so let me get the numbers for you all. Over the last month, Bitcoin is now down 4.5%, and Ethereum is up just under 25%. So a big difference in the way those two cryptos have traded over the past month now. And Ethereum just actually broke out over the weekend to a new all-time high. It's a little bit lower than that now, but do we think this trend of Ethereum leading in the crypto space will continue? And then if so, how can we play in the stock market? Because there are a few stocks. I actually believe BMNR, which was asked about on a recent stream and was looking very good in the Prospero signals, is one of the companies that has the Bitcoin, balance sheet strategy, but they're doing it with Ethereum. So an interesting time for that company and some other companies that have pitched themselves more to Ethereum than Bitcoin, and how will that affect them going forward? Let's take a live look now at the Prospero short-term bull list. I think there will probably be a bit more technology on there today than there was at the end of last week. So it'll be interesting to see how it's changed. I see Kevin Hawthorne is in the chat. Good morning from Lakeland, Florida. Good morning, Kevin. I hope you are enjoying the stream so far, and just you wait. We're going to get into all of these topics in depth. So it's going to be a great stream today. And then at the end of the stream, we're actually going to do the model portfolio update. So George will make live changes to the model portfolio, which is great for a lot of you guys to see what he's doing, how he's actually managing the portfolio in real time. Mario said, "Good morning from CDMX." Good morning, Mario. Welcome back. Always good to see an OG viewer in the chat. I see George has just entered the stream. Hello, George.
Hello.
Happy Monday. All right, so I was going to read the short-term bull list for everybody. So let's just rip through it in the Prospero app. This is the page you open up to when you open the app. So we have Meta, Eli Lilly, UNH, Google, NVIDIA, PayPal, FICO, Alibaba, and Tesla. And we're going to be getting to Tesla in just a bit. But where I want to start today, George, is the reaction we saw from Jackson Hole by the market. We were covering Jackson Hole leading up to it. It seemed like the entire market was on edge and a little bit cautious, and our signals even were definitely picking that up. But then we finally got the event, and it was kind of a reverse of a sell the news. It was kind of like buy the news because Jackson Hole was a very bullish event, and Powell was able to boost the markets. I don't know if you think that was like a one-day reaction, or you think this is setting up for a sustainable, full rally now, like we've seen so far this year. If it's changed your opinion that much, but how do you feel post Jackson Hole now? Our signals are not like insanely bullish. They've moved up a little bit, but how do you feel?
Well, hold on. I lost the screen for a second. I don't know what's going on. I don't know if you can hear me.
I can hear you still.
I can see you too. My computer froze for a second. All right. Well, we'll see if it pictures itself out if you can hear me. So I think one of the things that we wrote in our newsletter that was super important this weekend was the idea that, I think it was a Bloomberg chart that said his comments were actually more hawkish than dovish. Like the actual, there's I guess an index on on Bloomberg were how hawkish the Fed is, and it actually went up from that speech. And I think that's the surprising thing. And I think that like what's going on in the market as a result is very confusing, right? Because we see an event that like when you step back, the market views as overall hawkish, but the market's just reacting very positively. And I just think we have this weird momentum thing going on in the market where any positive news, when we talk about it, I think retail plays a role in it. And when institutions know retail is going to keep buying, they keep playing momentum. And, it's a good environment to do momentum trading because, everybody's buying the dip. Anyone, even if there's even a slight perception it's good news, it's going up. That's a pretty easy market to play. But what's happening in that quote unquote easy market to play is I think we're getting more and more disjointed from the actual value of the market. And we're pretty loose with that term value because we think, what people would consider traditional value is no longer relevant. But yeah, I think it's also a pretty scary situation.
Yes, because from what you just said, it would make me believe if we're getting more and more disjointed as the market rallies, that's setting up for a bigger and bigger decline whenever it finally happens versus just a more normal pullback in the markets. It could be something a little bit extra when it finally does happen if it continues to climb farther and farther away from reality.
Yeah, I mean, I think an appropriate, like we keep talking about, I think it would have been appropriate to have it be, have it react a little more poorly to the PPI reading and the higher core CPI reading. I don't think I think it merited some bullishness, but we saw there was a huge bullish event and then a bit of a pullback on Friday because I think people realized, like even people playing the momentum, I think realized that was a bit of a crazy run. So yeah, it's a really, really tough market to look at right now. I'm going to re-enter, even though it's not frozen, I'm going to be right back. 1 second.
Okay, no worries. Hello, LAU. I believe I pronounced it Lao from Venezuela. Welcome to the stream. George's computer was frozen, so he's going to be right back in here. I think his picture's trying to get him off the screen. All right, so we'll see if we get George back in just a second. I have one more follow-up question for this topic we're beginning with today. Now we have
my Chrome was frozen and it was very disorienting.
Wait, let me see if okay, here, let me remove this. There we go. Now we're good. Okay, so I have one more follow-up for our initial topic as we get in started today is so the value first growth that had finally started to look like it was flipping to where maybe value is more interesting. Is that still the case for you, or is it less the case now after the news we got and the reaction we got in the market?
No, I mean, it absolutely is. Like we kept our portfolio more value oriented. The nice thing about the value names we're playing is they have a lot of room to go up because they've been hit so hard, right? So I think traditionally you like growth, like one likes growth names because they have the potential for a lot of appreciation. But we're kind of trying to play the best of both worlds here, where like our value names also are ones that we think can move a lot in an up or down market.
So I wonder how you feel then for NVIDIA earnings this Wednesday. Can they deliver again? Probably a pretty high bar, especially after all the growth they've been on over the past couple of years. And right now they're expected by the market to grow 53%. Do you think they can deliver? If they do, they don't. How do you think the market will react? And how closely are you watching their earnings? I know there's been some NVIDIA earnings watch parties. Does this feel like it's one of those more important ones?
This is a tough one, right? Because we're seeing a bit of a softening of the market. And, we saw that with AMD. They had a decent earnings and it went down. But I don't know. I'm leaning towards NVIDIA looks really good in our signals. And I'm definitely leaning towards playing it, to be honest, and just having a tight leash.
So people were wondering all over FinTwit, because NVIDIA and Palantir were trading actually pretty similar share prices for a while, but now it's become very different. Do you think if NVIDIA reports well and the re-excitement gets back into tech, do you think Palantir is an interesting buy the dip at this point at $156 per share, down about 20% from their highs?
I'm not sure about that. Like we got out of it this weekend because it's a little soft in terms of the metrics. So we're a bit concerned about it in that respect. So no, I'm not sure it's a buy. We dumped it for a reason this weekend. I'm not super confident in it right now.
So there's a lot of these like the stocks that were the growth stocks that were leading in performance, like the Robloxes, the Oklos, and all these stocks that are up like 5 to 10% today. And I want to get into Opendoor, which is like the memeiest of them all right now. But what do you think's going on there? Like, is this just, you think this is like exit liquidity? What are we seeing here? Why are these stocks making like big moves today? And do you expect this to be faded quickly in a lot of these? Like, would you, if you're an investor or a shareholder in these companies, would you be selling this move today? If you're like one of those people?
It's the momentum market, right? I think that's what we're seeing. I think we're definitely seeing just when you see something like this today, right? I think essentially what we're seeing is, Rocket Lab and ASTS are both up. Those are good momentum names. But I think basically what you're seeing is, like there's, we're looking at it and there's, Palantir's down or other momentum names are down. It's a bit of a soft day. And then you have people pile into these momentum names because those are the ones going up. And that's how momentum works. And then you have people anticipating, maybe it's a bit of a soft day in the market. We should play open. Short squeezes, we talk about it all the time. Short squeezes become very popular. And this is one of the most popular time for them because they can go up on down days. People will flock to them because they can say, for whatever reason, I don't know how it's been aligned like this, but there's a perception in these short squeeze communities that when the markets are going down, that institutions are like in trouble and that they'll need to cover the shorts. And that's actually like a fundamental misunderstanding of what causes a short squeeze, right? Yes, if institutions are in quote unquote trouble, if they're having margin pressure, then that could happen. But you really need to get the quote unquote trouble. These institutions are making money hand over fist. A lot of them have had great years. It's been an easy market to play because, to put it lightly, it feels like institutions are getting a run on some of these news events. We've seen numerous times that they're trading ahead of them. It's been a really good year. It's been a really good time to be an institution, right? That doesn't equate to trouble. You don't get in trouble from one red day or one, 2 red days or even 5. We had 5 small ones. That's not trouble. That's not creating a situation where you can't cover your Opendoor shorts. And in reality, when something like Open has this much attention for a while, you don't really have a lot of, perpetual shorters in. And a lot of the times we've talked about, a lot of the people that are shorting the stock own more in call options. And there's been plenty of times to cover, right? Even in the last few weeks, Opendoor has gone down a lot to a point where it would be easy to cover. So yeah, the perception around these is all messed up, but that doesn't change the fact that on, red days, people flock to these because the other traditional, the Palantirs, the NVIDIA, some of the chip stocks are having weak days. New money isn't as exciting for them because they're going down and people are very fickle and impatient.
So with Opendoor, it's now up nearly 700% in the last 3 months, up 10% again today. It's traded over 300 million in shares already today. But I feel like we need to put out maybe if you agree or not, a cautionary tale. Like I feel like the more retail sees a stock like this go up, the more FOMO they have and the more they feel the desire to get in. But the more it goes up, the less good the odds are that it will continue to when it's like a momentum and highly volume traded stock. But it is an interesting one in our signals. Like if you look at the short-term signals, it's almost maxed out. Like I've almost never seen a chart like this. Like they're all above 80 essentially. But I don't know. How do you feel about that? Like the FOMO aspect of it. Do you agree?
Let me take a look at it myself. Yeah, that's crazy. That just says it has a lot of attention. It's looking pretty good in the long-term signals, but it's crazy. We've been burned. We got into it and we've been burned on it before. You never know when the rug pull's coming. That's the problem.
Now, I have one more question on this topic. So, while all of this has been happening, I've been like eyeing GameStop because I'm like, is it ever going to trade with Open Door, kind of like as a halo effect, like the original meme? And it's red today, even still. Do you think if Open Door really hits like a fever pitch where it's like everybody on Wall Street is talking about it, people will turn their attention to GameStop maybe at some point, and that could be an interesting way to play it, or not interesting to you?
Look at the weekly chart, right? Since it had a nice little run in June, it's really been choppy. You can look at it as these quick runs up, quick runs down. It's actually a really interesting weekly chart. But these meme stock things depend on a lot of people and a critical mass of attention. That's even what gets the institutions, and people are just on to other things, right? Maybe if Open Door, some of these other ones went away, but people are involved in this Open Door thing right now, and there's a lot of attention, and there's not enough juice. There's not enough juice for this many meme stock trades. There just isn't.
So last week we were covering how there's possible some worries for the financial sector. I saw SoFi was mentioned in the newsletter, and they're up a lot today. And Robinhood, I was checking, I was wondering if they were up as well. They were red. Do you think SoFi could kind of take over that lead spot of like the growth finance space from Robinhood, being that they haven't rallied as much? And I think SoFi is like around a 30 billion market cap, and Robinhood's up to like 100 billion now. Would you put them over in the first spot right there, or not just yet?
SoFi above Robinhood?
Yeah, I would say for like the end of 2025, like how you would feel about both of them.
Nah, I think Robinhood still looks better. It's been a little lower, but it looks better in the signals. So no, SoFi just doesn't have. It's a solid business, but it just doesn't have the retail fervor that Robinhood does, and it doesn't really have like. Robinhood is very good at collecting amateur investors, basically people that don't want to put in the work to really learn. And Robinhood is like, it's closer to a gambling act, and they've literally added gambling app than it is an investing app. Like SoFi is a real investing app, and as a result, it's not going to have as much potential as Robinhood. There's also more risk involved in it for a reason, but yeah.
Well, what you just said makes me wonder about Robinhood sometimes. Like, if they're wrecking their users financially, how can their business be sustainable?
Wrecking your people is quite profitable, unfortunately, for better or worse, right? I think there's something like, I've heard some stats that I think that it's just like, I think it's something like maybe like 10% of like, Bud Light drinkers or Budweiser drinkers like have like 70% of their sales. And like, it's the same thing for casinos where it's just like, or any gambling thing where it's like, and you even hear these nightmare stories about, whether it be DraftKings or whatever, when people stop using the app, they'll like invite them to events or they'll do things to get them using it again, because it's these big people that lose money, right? And it's addicts, right? And it's the same thing in Robinhood. It's people that it's actually the losing money that gets them to spend more. Like, you have just like a trader that's, just here and there, remember Robinhood makes money off transactions, right? So they want people that keep chasing the wins, right? And unfortunately, that's what happens. Those are the kind of people that they make the most money off of. The people that just keep chasing wins, even though they're not getting them. It's the same thing. And that's what makes all this stuff very tragic. It's sad.
Yeah, that is actually very sad when you lay it all out like that. Ori is asking on YouTube, the market opened in the red, but has been recovering nicely since. Does that mean anything to you, that action that we've seen so far today?
No, it means nothing to me, because the way I'm positioned pretty even, actually dead even long short. And I don't have any intention to change anytime soon. And I think if this is the time to start experimenting long short, if you haven't. Granted, we're not, actually this is something I've gotten asked before. Like, people look at it and we've been in like the 65 to 75 range now for a few weeks. So that might look like we're not gaining anything or we're just treading water. But actually, if we're staying at 65% above the market, that means how we continue to return. That means we're just like sticking with the same very high return. Because if we were returning 40% above the market, then we'd be going down lower. So we're pacing with the same way we have on the year by playing it pretty safe and staying even long short. And that's the thing. That's where there's nuance to this sometimes, and where we always teach it, right? Even though QQQ and SPY and option sentiment were low last week, there was times we were more short than long. But going into Powell's speech, even though it was very bearish, we know we're in this buy the dip market, right? So we have to play both sides, and we'll continue to play both sides until one becomes very clear. And I don't know when it is, because I don't think this buy the dip market is going anywhere. And I don't think the structural concerns, like we said it in the letter, like Ray Dalio thinks there's a crash coming. Michael Burry has a $98 million short position on NVIDIA. Like, these things are people are seeing real concerns in the market, and it's what we're talking about, right? We are not on top of inflation. There's starting to be some problems in the job market. We don't even know what the real job market numbers are. We just know that there's probably problems because even Powell's acknowledging that a lot more than he did. And we're not on top of the inflation, really. The market's pretty topped out. Even though the market's topped out, it seems like the current administration is more interested in keeping it going up, even if we're gonna have to pay the piper for that down the road, right? And I would say that has been the interest, right? So I think we're entering a pretty scary time, especially if interest rates drop as much and Powell's out, interest rates, like I think that's pretty scary. And I think we always talk about this as well, where it's just like, yeah, this momentum is fun, right? And we might actually be a year away from a really difficult economy, especially with the extent, I think the government wants to prop up the markets, right? And that's not rare, by the way. That's not anything against Trump and the administration. All these administrations have wanted to prop up the market for as long as I can remember, which is a long time, probably since I've been in college. There's been an interest in that. And that's probably just a result of that's when I followed economics closely. It was probably like even before that as well. I mean, that's true. Bill Clinton was pretty famous for, some of the deregulation that he did. So yeah, maybe my whole life, even though I wasn't following it as closely, right? However, when we see the dislocation from the leading indicator, that's new. And that actually might mean that this administration is more effective at propping up the economy, even though there might be trouble, more than any that we've ever seen. So what's my point? We might start getting people, it might already be happening, right? When you start to see Michael Burry, when you start to see Ray Dalio, when you start to see all these people just being like, I think the game of musical chairs might be open, it's going to stop. All of a sudden, it might not be an event that says like, oh, we have stagflation already, or whatever other problem might emerge. Maybe the job market's tanked because of AI, all that stuff. It might not be the actual news. It might just be that enough people get worried that bad news is going to come, that there's going to be real economic problems, that they start shorting the market. You actually see it time and time again. If you think about all the way back to the Great Depression, right? It actually wasn't there was a lot of irresponsible, gambling, propping up of the market that occurred going into that. It wasn't some specific economic event that tanked it. It was more that all the people that were speculating on the market decided that it was kind of the end for that. And it works very similarly today, right? There's a lot of concern. And then all of a sudden, the powers that be, when we talk about this, all of these people talk, these hedge fund managers, they're all exchanging information with each other. And sometimes it just gets to a point where we're just like, I think there's too much risk in this market. We're selling our stuff. I'm hearing too many people saying that they're concerned about this and that's going to happen. So that's why we're talking about staying on our toes. Like we did see SPY and QQQ net option sentiment soften. That's always going to scare us. But what's different now than has been in the past is like we would be way shorter with these QQQ SPY net option sentiment where it was. But we're seeing this, this retail fervor, this aggressive buy the dip market. That means if you're smart, we consider ourselves to be smart. I think you have to play both sides right now.
And I have a follow-up for this because I feel like with what you just said, today's market action is a little bit counter. And with any thesis you have in the market, if it's like semi-long term or long term, you're going to have days in the market where it doesn't go the way, your long-term outlook is looking. So how do you remain confident? At how many days or what do you see where you're like, oh, maybe I need to rethink? And then, because I feel like this is like a muscle that you need to build up as an investor over time, like seeing something for a single day of trading and you're like, oh, well, I still think it's going to happen over the next weeks, months, or years. So how do you remain confident in your theses when you see like a day that doesn't exactly play out like to your thesis?
I'm not confident. I'm playing both sides. If I was confident, I would be going more in one direction or another. There are days when I'll play one side more than the other, for sure. But the bottom line is I'm not confident right now, and I don't think anybody should be, right? And we talked about this in the letter. There's this past Sunday. There's really good stories of why it's destined to fall a decent amount and why it's destined to climb another 20%. I could easily see the next month being a 20% rise and a 20% fall. And I don't say that often, but there's just so much buying momentum and there's so much irrational confidence, I would say, in the market. And then there's the other side of the rationality that this is getting really, really overvalued, even by my loose standards of what value is and wanting to play momentum. And when I say that, I think the important point for people to understand and for me to be very clear about is, right, I don't necessarily care about PE ratios of companies, right? I was buying Palantir when it was well into, or adding it when it was well into the 300, 400, 500 PE ratios. So that's not what I mean about value. I actually mean the market changing from economic indicators, like the leading indicator that we talked about 2 weeks ago. Those two things becoming disjoint in a way that they never have before. Like normally you can look at the chart. Maybe you can find it and throw it up, Stephen. It was in the letter last week. I don't know how easy it is for you to post it, or maybe I'll pull it up. Actually, that would probably be good. I'll keep talking as I find it, or I'll do my best to. So when you see something like that, when you see something like Powell is speaking and it goes up, but when you get into the brass tacks of it, it's not that positive, right? I'll pull up both of these things because I think they're important. Right? Let's take a look at this. So first, let's take a look at this, right? And this was last week. I'm sure it's become even more disjointed. This is a leading indicator. The leading indicator is making up a lot of inflation. Look it up. It's pretty complex. But you can actually see right here, it tends directionally to always kind of move in the same direction, whether the price is a little ahead of the leading or the leading is a little ahead of the price. Like, you tend to see them move in the same directions and also kind of rarely cross, right? You see like a very small cross here, a very small cross here, but they tend to keep up with each other. But look at what's happening now. And by the way, this goes back to 1981. You're not seeing any kind of disjointed nature about it. Then you look right here. You see one going down, one going on to the extent. The biggest cross we've seen in the last 40 years, right? That's pretty incredible. Like, just right there, that shows like what unprecedented times we're in. And you start to see this, like this crash. It probably got bigger last week, right? Then you actually look at, this is the Bloomberg table I call Fed sentiment, right? This is headed more hawkish, right? So it was actually more dovish until he spoke, right? And the price went up. Like, that is what's so concerning about the current market that we're in, right? That we are departing from the rational movements of the macroeconomy to the market, right? And that's the thing. There's people all day long, blah, blah, PE ratios. Of course, Jim Cramer said Palantir was a buy at the top of Palantir, and you always have to love when that happens because we were out of it already. But PE ratios on companies are, in this day and age where people will overpay for growth, who cares? But you have to take this macroeconomic stuff very seriously because the institutions are making their decisions on macroeconomics, and eventually they're going to say, this is too much of a disconnect. We need to see these corrections. And I do think one of the things we're seeing here, and it's going to be interesting to see it played out, I think for the first time, we're seeing enterprise a bit afraid of the government. And I think that that's one of the things that's calling this disconnect. Like, I think we can remember back to Walmart saying that prices were going to be high from these tariffs, and Trump having a conversation with Walmart about that, right? And then all of a sudden, you're seeing companies absorbing 70% of the tariffs when typically customers absorb 70%. So that is, I think, the big unknown in this, and why we're just like, how can you predict this? How do I know if Walmart's going to, grow a pair all of a sudden, right? I don't know. Maybe they will. Maybe they won't. But I do know if they do, and they start passing, as Goldman Sachs says, they expect 70% to be passed on to the customer, not to be absorbed by the company. I do know if they do that, there's going to be trouble in the market. If they do, if they don't, that's anybody's guess. I don't think anybody is I don't see a lot of people interested in standing up to the Trump administration around. But traditionally corporations don't really give a shit about what the government thinks. So something's got to give there, and I am not the person to odds make it. I don't even know who is. And you see all these situations. You see NVIDIA getting what they want by playing ball with Trump and coming to the table with him. You see Intel getting this bailout, right? It cuts both ways, right? If you want to play ball, if you want to get along, you get rewarded. If you don't, you get punished. So this might continue. And this is, I think, the big reason it's disjoint. If we can put it down to that one thing, I think that's it, right? I think the market is in serious trouble by the end of the year if companies start passing along these tariffs to consumers. But they might not. They might be too afraid to do that. And that's the story. And that's why we say, like, you ever see anyone online saying, this is going to be a bull market, this is going to be a bear market? Like, they're wrong in their assumption, right? It might end up being a bull market. They might end up being right, but they're not right because they don't actually know what's going to happen in this situation. Neither do you, neither does anyone. So the smart thing to do is what we're doing. Play it pretty neutral, right? Because you could end up being right, but you're going to be right for probably a coin toss of a situation. And the other side of that coin toss is you, I think, probably losing a lot more money than you'd make on the right side of the coin toss, because there's still more selling pressure on the market than there has been for a while. So there's not the same upside, but there is some serious downside. So like we've said, this is also a very different market. This is the first time we haven't advocated for ETFs. This is the first time we say, put stops on your gains, right? You don't even need to do, you don't even need to worry about inverse ETFs right now. And I should actually change that part of the letter, because I always have that standard part of the letter, but I should change that and talk about putting stops, right? That's what's so unique about this market, because we could see it keep going up. Typically, we advocate for inverse ETFs because when we see the market as neutral to bearish, right? And that's pretty easy, where we're just like, protect your downside. It might go down. You can still own what you want. But we actually see this market, like I said, as a market that could go up or down 20%. And in that instance, the best thing we can advocate for is do your best to lock in the gains, right? Have it flip to cash, have it correct, keep your money in cash. Maybe when you stop out, maybe you think about buying some more value picks, some more inverse ETFs at that point after you've locked in your gains. But that's why we advocate for that in this market.
So it kind of sounds like maybe the companies like Walmart, you're saying you wonder if they're going to pass on the cost to consumers or not. They might be damned if they do or damned if they don't, because like Mario's saying, absorbing the tariffs by the company will hurt margins and EPS. But then if they pass them on to consumers, maybe people will buy less. So is it just a bad situation all around for consumer-facing companies?
Could be. Yeah. I mean, I think it's gonna be very interesting. A lot of people say the tariffs are really gonna start impacting next quarter, right? It's gonna be interesting, right? But I think it's what makes it hard to odds make, right? And what makes people, I think, absorbing it right now is they don't know what the consequences for pissing off the administration are, right? They could be quite severe, right? Like just having a couple bad quarters as you figure out the tariffs, right? You could be facing something way more severe than that. Like when Apple was tangling with the Trump administration a little bit, they faced some pretty severe threats. So that's what makes it so hard. And I think part of it, we live in a very headline risk averse place, right? I think the unknown is, I think when more of these companies start doing it together, and they might be having these very same conversations, right, amongst themselves, like, hey, if we raise prices, like if we all do, we can't all get punished, right? So there's probably a lot of these backroom conversations going on right now that, you know, the skeptic in me says maybe Palantir is giving information on that back to the administration. But
I like that theory.
That's too dark of a timeline for me right now. We'll see how that plays out. But yeah, I definitely think that's the big unknown in the market. And like, I think to your point, I think we'd see them have some disappointing quarters first. And it would have to be a number of companies in retail that are just like, we can't do this. Like our stock price is going to we're going to have to deal with you know, figuring out how to get our profits because we're going to lose our company if we absorb all this. But, you know, the other part of it, it really goes to show you that how profitable these companies are. They might say, hey, we can lose 5% on our margins as long as we're not pissing off the government that now has some real teeth against us. Or maybe they'll figure out some other way to make it work. This is a deal making government. Maybe there's some horse trading to be done where they could raise prices, but they can, you know, build more factories in the US or, you know, buy more US. There might be a way to make it work, but they're going to have to figure it out. And I don't think they haven't figured out yet.
The question I have is this dynamic you're talking about where it's like where the companies and the government are at odds or just there's a lot of tension? Do you think this is a 4-year situation, or do you think this will have a lasting effect on the government going forward, and it's more of going to be a lingering way that the USA government operates for like the future?
I'm not going to touch that question about whether this is going to be over in 4 years. That is too prickly.
I got you. All right, we can move on to Tesla, because I feel like we haven't been talking about them a lot recently. With everything we've said on the stream so far today, it doesn't seem like the stock that would really fit the bill for what you like, but they do have 100 out of 100 in upside breakout. I know their net option sentiment was lagging a lot, but it's up to 86 this morning at least. Any interest in them now that the headlines have died down from the drama, and maybe full self-driving is being realized, or not quite yet?
You're behind on our portfolio. We added them on Friday.
So, because I know some people were mentioning them as like the most lagging Mag 7 stock. Is that it's kind of fitting your buy the dip type of investments?
Yeah, I mean, I think it's simple. I think a lot of people are excited about full self-driving. They're making progress there, right? And it's what we always talk about. Net option sentiment was at 94 on Friday. When we added it, it's at 93 now. I think when you think about what makes Prospero great, right? It's that whether it's earnings or news events or whatever, we get some of this information before it happens, right? For whatever reason or whatever thing, we you have people speculating on it, whether they know 100% is going to happen, or just when we're looking at the wisdom of crowds, enough people have an inclination of it, And I think we're at a time with Tesla where any day there could be a big self-driving announcement that, rockets the stock. And I think that's where we're at right now. We're in a really good place. Like, there's a lot of influencers, especially I'd say maybe the one with the biggest following that we work with is a Tesla influencer. So I'm following it a lot closer, and I actually see on his X a lot of really interesting progress on the self-driving. So I just think, that's another stock you can't really look at value, right? You've got to look at the fact that, a lot of people are going to play that upside if it works.
So in sticking with this theme, I wanted to ask you more about the sectors that were the highest growth sectors, or maybe the most exciting future sectors that have kind of gotten hit. So I thought of 4. If there's another one that you would like to add to the list, like by all means. But so quantum, the flying cars / drone companies, nuclear, and space stocks. I feel like these are the 4 sectors where they are at the stage where they're like most in the future. So there's like a lot of growth runway, but they're also so far away that it's like there's not even much of industry there yet. Of those 4 sectors, which do you have the most faith in long term to actually be actualized and like deliver the promise of, whatever investors now believe it will become someday?
I think my favorite of them is the space ones, right? And I think especially like ASTS. I like Rocket Lab too. But what I really like about the space ones, right, is there's very real applications now, like cell phone signals from space, right? That's a today thing. There's large partnerships, and it could be that much bigger in the future, right? It could easily get to a point where everybody's cell phone coverage comes from space. So that's a huge growth industry. And then once you're sending satellites up there, there's potential to offer, other services like broadband internet, things like that. And that's why I think ASTS, it's got an exciting present and an exciting future. And some of these ones like, SpaceX, for example, right? That is a very exciting one, but it's about space tourism and interstellar travel, like maybe not interstellar, but like travel and colonization, and that's exciting. But I'd much rather invest in an ASTS that's got a space application that's meaningful today.
Also much smaller of a company, so I guess more growth possible. I might be wrong, but I think I saw SpaceX is like over $350 billion on the private market now or something. So do you think
It's
they'll go
crazy.
public anytime soon now that we're seeing a lot of IPOs?
Yeah, I think it definitely will.
Mm-hmm.
And it's going to go nuts just because people like these like crazy parabolic things. But like I said, I'd like something that's a little more balanced.
Mm-hmm. So one thing that caught my attention over the weekend, which I kind of missed at towards the end of last week, was Cracker Barrel updated their logo. They followed this wave of companies that basically just make the most minimalistic, just like it basically just says Cracker Barrel now in letters. And people hated it. They lost $100 million of market cap. I think probably just an overreaction, but how do you feel about this trend we're seeing? Like it seems to really be upsetting people now, where all of the life, the soul, the character of companies is seeming to be removed for more simplistic and just like basic logos and everything about it. So do you agree that that trend is happening, and do you think maybe we're hitting a peak and it will reverse, or just what are your thoughts on it?
I don't care. Like I'm so tired of everybody getting up in arms about everything. It's so annoying. Like who cares? Like I don't care about Cracker Barrel's logo, and I feel sorry for anyone that does. Like I feel sorry for the company that feels like they need to change their logo. I feel sorry for anyone that gets up in arms about the logo change. It just shows how bored and how bored everybody is in the world, and how like disconnected we are from anything meaningful, that people have to like find meaning in caring about this like logo situation. I could not give a shit about either logo. I think the other one is like, I think the other one has a little more character, but who cares? It's so dumb. All these people. And it's not just that. It's everybody trying to cancel everyone for everything, like on both sides. It's just like, just shut up. It's so stupid. Like, don't we have anything better as a society to discuss than Cracker Barrel's logo? And like, I hope someone that cares about this sees this video and thinks long and hard about why the Cracker Barrel emotion, like why the Cracker Barrel logo gives them any emotion at all. And maybe they should try to look for a little more meaning in their life, where like that's what elicits, that's what it elicits an emotional reaction. Like, trust me, there are a lot more concerning, disappointing things. Look around in the world that actually like deserve your attention and deserve your emotional attention over that stupid fucking logo change.
That is a great take. I love it. What a rant. All right, that was awesome. We have to cover Keurig Dr. Pepper, because they are making an $18 billion acquisition of JDE Peet's, which is a coffee company. And once this acquisition goes through, Keurig stock is going to split into their beverages side of their business and then a coffee side of their business. The stock was down 8% from this news. I was more so wondering, does this like food space fit your more value-oriented interest in the market? Like we've been covering the healthcare and all of that. A lot of these food companies haven't done great. Would that fit that bill? Any interest in these types of stocks like the Coca-Colas, Pepsis, Keurig Dr. Pepper?
No, and I mean, I think any soda is like, I look at it like pretty similar to like any business that's on the downtrend because of like society's tastes changing, right? Like I think it was somewhere in between, like when I started college, because like I actually remember, and this was like, I don't know, like 2 decades ago now. And I remember even from when I started, I think I might have drank soda and there was like free soda in the dining halls, but I actually remember around that, like research started to come out then about how like soda was one of the worst things for you that you could drink. And it's like all just like sugar and like what you didn't think about, because we were always told that like fat free was good and like sugar was fine. That's what we were told growing up. But like when I actually found out that it was like, like all that sugar, diabetes, like weight gain, like very associated with that, like that was meaningful. So I think that I think people have become more and more cognizant of it. And I don't believe in the soda business. Like I don't want to have anything to do. Like if there was like a news event or whatever, and these businesses look good. But like honestly, I remember myself shorting. I think I've shorted KDP, Keurig Dr. Pepper before. I'm pretty sure I shorted Coke recently. Like I would be open to investing in it. Hey, I put Robinhood in, and I used to rant about that and the morals more than anything, just because like you can't. Our job here is to advise people how to make money, not take our moral stance. So same kind of thing. But I just don't. I would be shocked if I saw one of those stocks looking good in our signals, just because I think there's too much awareness of how shitty those products are right now. It's just going to be hard to get a groundswell. It's like kind of the opposite of like these other products that do get groundswells. And I think like the perfect example is like, it's not like this anymore, is like Celsius Holdings, right? I do think it like had a bit, but for a while, everybody was excited about it. And people were forecasting like, oh, Celsius, their drinks are going to like take over, and it took off, right? There was an energy behind it. I don't see anyone getting that excited about like sodas or shitty K-cups. Like, maybe like, on the other side, if there was like an artisanal, like, cup brand that was like doing very well, like I use an espresso, like those machines, those are very nice. I mean, it's not the nicest coffee, but it's way nicer than Keurig. So like, yeah, I don't think low quality beverages are something that have a really good future in terms of excitement around them.
So we have one more topic to get to on the stream, but let me just thank everybody who's been viewing. We've crossed the 2,000 mark, which is on a regular nowadays. So thank you, everybody. Hit that like button if you've enjoyed it so far, if you're watching on Twitter or YouTube. Follow us on Twitter, subscribe to us on YouTube. Great to see the streams getting a lot of engagement recently. Prospero is officially on the map. And also, if you have any questions about stocks or the market, AI, whatever, that we haven't covered yet, feel free to comment them in before we do our switch over to the model portfolio. But I want to ask you, George, because we've always covered basically Bitcoin solely on whenever we touch crypto. But over the past month, there's been a bit of a switch up in the leadership. Ethereum is up 24% and Bitcoin is down about 5%. Do you foresee any changing of the guard? Maybe not forever, but for the foreseeable future, where since Ethereum lagged Bitcoin, it could outperform for the next weeks or months. And then also, I think one of the stocks that was like wild looking in our signals, BMNR, that's like basically they have a lot of Ethereum holdings on their balance sheet. Do you think stocks like that can outperform if that happens with Ethereum?
Yeah, I mean, we always talk about when we talk about Bitcoin. Wow, BMNR still looks really good. When we talk about Bitcoin, a big conversation on Bitcoin is always you're pricing it so much to be the leader. And if you look at it compared to Ethereum has more utility. So I think it's not just that, right? I think Bitcoin, there's aspects to it, name value and things like that. It's in more ETFs, although Ethereum is gaining ground in that area. I think it more comes down to like, I don't know if it's Ethereum specifically, but I'm not as confident in Bitcoin keeping this, market leader elite situation. It could be Ethereum, it could be Solana. Like Solana is, much better with B2B applications, and there's going to be a lot of those. So yeah, that's always my issue with it, that it's really priced to be way more important than any of the other coins. And it might not be that, one coin eats into its market value. It might be like a bunch of different ones that has different utilities that just eat a little away to it. And it's not like it won't go up. It's just like we're talking about relatively these other coins could go up a lot more than it. And, that's always been my concern with Bitcoin. And that's always why I say BLOK, like block, the diversified, blockchain is the right way to go, especially for someone that doesn't have as much experience and doesn't have a thought. Like, by the way, if you know these smaller coins well enough, like Polygon, Matic is, one that we like as a smaller coin. We like the way that it's built. Think it's got a big future. But if you know them well, by all means, go for it. But if you don't, I wouldn't take risks on any of these, even Ethereum running like it is. Just buy block.
Well, we have come to the point of the stream, or it is time to do the switchover. The markets have kind of continued meandering in whatever direction they had started the day. QQQ is the only one in the green. So it'll be interesting to see how you decide to make some switches in the model portfolio. But we'll catch you on the other side. Everybody, stick with me. George will be right back. I'm sorry, somebody is hammering something in a yard next to me. I don't know if you guys can hear that or not. But hopefully you guys all enjoyed the topics today, got some value from the streams, the coverage. It's a little bit of a switch up in how George is feeling about the market. I feel like definitely in the last week has been way more conservative and a little bit more cautious than most of the year. So we'll see if this, continues to be the case, or if the tech and growth trade is going to, AI trade is going to come back in full steam, but we'll have to wait and see. I want to look at the QQQ and SPY net option sentiment now to see if they are at similar levels of beginning in the stream. I see Mario said nice rant. That was a pretty epic rant George gave on the Cracker Barrel logo switch. That'll make a great short on the channel. I don't know if our live stream viewers actually tune back in to see the best moments of the live streams in our shorts, but we post them on Instagram, Twitter, not Twitter, Instagram, TikTok, and YouTube. Clip up the best moments from the live. So even if you ever miss a live stream, you can kind of see some of the most important or impactful parts in the short form content. So give those a like if you ever see them popping up in your feed. Interesting right now, wow, the SPY has a higher net option sentiment level than the QQQ. Cool. SPY is at 20, QQQ is at 19. Fascinating stuff, and it just makes me think how George said he's kind of playing it neutral. It seems like our signals are kind of recommending that even more. Both, our bull line is 40. They're both kind of just in that no man's land. I would guess down in bearish levels, but not like super low, like in the signal digits like they've been, and very close together now. So that's interesting to see for sure. And we're going to be streaming again Wednesday, right before NVIDIA earnings. So everybody's got to tune back in then.
All right.
George, it's super interesting. So how you say you're like split 50-50, our signals are now basically even, but the SPY is slightly higher at 20 and the QQQ is at 19.
Wow, that's the first time we've seen that behavior in a while. Like where they were close, but low. It's interesting. Okay. Okay, so you said
the SPY is 20 now and the QQQ is 19.
That is very interesting. Okay, what else do we need? The model portfolio. Okay. Damn, the stock lays. I don't know what's going on with it. We added it. We didn't add it to our investing letter, but we probably should have. It shows we should trust one of these small cap stocks. It's up 50% since we added it. Gotta trust when these small cap stocks do well. Okay, let's see. Let's get the screen shared. does it do that? Okay. Oh, I think we want to make a new screener today too. We've been doing that. Just kill all the birds with one stone. Oh, large cap growth is doing well. Check communications. Interesting. I think that fits our current screener pretty well. What's our current screener? Risk controlled growth. Yeah, I think I kind of like this screener. Oh well, saving some time now.
Large cap growth is doing well today, but it is the lowest on the 1 week. So we won't lean too hard in any direction, but be highly signal driven. Similar story here, other than the fact that consumer defensive looks like a great bear target because of its weakness on the 1 day and 1 week.
Okay. Let's look at this. Do we have this? Yes. Interesting. That is not what we want. That is what we want. There we go. Got a lot of NBOs. Oh, well, it's working. All right, 37. 27. Very interesting. Yes, it was that, though. We definitely need to add some bears here. Anything interesting? Goldman looks interesting. Do we take a ride on Open Door? I don't think I can wrap my head around that. It's just too crazy. Can't do it. But probably this. This looks interesting. What's going on with AEHR today? Whoa. What happened today with this thing? I think we are late on that. I don't think we're late on this, though. Already added Tesla. All right, nothing to see there. I feel good about this. Do we have any? Do we have any SoFis here? We do. Do we want one more? I think with how strong it looks, we've got to. All right. All right, now let's take a quick look here. We got out of Meta after 82 days. It feels like the end of an era. That looks good. What's going on with Lulu? Let's look at the chart. Because I do kind of want to add SoFi. It's looking too good. And I promised everyone I would limit this. All right, I think that's what I'm doing. I'm adding SoFi. I also do really like Root. What's going on with SoFi today?
I don't know if there's anything newsworthy with SoFi specifically.
Just looking strong.
Maybe student loans coming back. I think I saw something about that. I know they do a lot of that.
Okay. I'm just going to do SoFi. All right. SoFi. All right. Yeah, that looks good. Okay. These are our moves. Okay, those moves are done. All right, that's everything. Any questions?
No questions in our chat. Everybody's happy with the topics. We will be back live Wednesday, 3 p.m. before NVIDIA earnings. So it's going to be a big, big day. It's going to be important to watch. So hopefully we see you all back. Thank you, George.
Thank you.
Nicole said thank you. You are very welcome, Nicole. See you guys on Wednesday. Bye, Mario.